Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is March 5th, 2025, and we're diving into Hydrofarm's fourth quarter and full year 2024 earnings report. Hydrofarm, a leading manufacturer and distributor of hydroponics equipment, has just released their financial results. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Hydrofarm's latest earnings report provides a comprehensive look at their performance amidst challenging industry conditions. Let's break it down.
Revenue and profitability overview. Let's start with the top line. Hydrofarm reported net sales of $37.3 million for the fourth quarter, a significant decrease from $47.2 million in the same period last year. John, what factors contributed to this decline?
The decrease in net sales was primarily driven by a 16.8% decline in the volume and mix of products sold, largely due to an oversupply in the cannabis industry. Additionally, there was a 3.9% decrease in pricing, which further impacted sales.
And how did this affect their profitability?
Gross profit fell to $1.8 million, down from $8.4 million, with the gross profit margin dropping to 4.9% from 17.9%. The net loss increased to $17.5 million, and Adjusted EBITDA was negative at $7.3 million, compared to a loss of $0.6 million last year. These figures reflect the challenging market conditions and inventory reserves impacting their margins.
Operational efficiencies and future outlook. Despite the challenges, Hydrofarm has made strides in operational efficiencies. Can you elaborate on their cost management efforts?
Absolutely. Hydrofarm reduced their SG&A expenses by 14.7% and adjusted SG&A by 9.8%, thanks to restructuring actions and cost-saving initiatives. They've also increased their proprietary brand sales mix to 56%, which is a strategic move to enhance margins.
Looking ahead, what is Hydrofarm's outlook for 2025?
For 2025, Hydrofarm expects net sales to decrease by 10 to 20%, but they anticipate improvements in Adjusted EBITDA and free cash flow. Their focus will be on optimizing their distribution network and further cost-saving measures, which should help mitigate some of the current challenges.
EPS forecast and analyst expectations. John, let's discuss the earnings per share. Analysts had forecasted an EPS of $2.80, but the actual EPS came in at $3.80. What does this tell us?
This indicates a significant miss on the EPS forecast by $1. The larger-than-expected loss reflects the ongoing pressures from the industry headwinds and the impact of inventory reserves. With only one analyst covering the stock, the forecast might not fully capture the complexities of Hydrofarm's current situation.
Balance sheet and liquidity position. Turning to the balance sheet, how is Hydrofarm positioned in terms of liquidity?
Hydrofarm ended the quarter with $26.1 million in cash and $13 million in available borrowing capacity. They have a principal balance of $119.3 million on their term loan. Despite the challenges, they generated $2.4 million in free cash flow in Q4, which is a positive sign of their ability to manage cash effectively.
CEO's strategic vision and closing remarks. Finally, let's touch on the strategic vision shared by Hydrofarm's CEO, John Lindeman. What are the key takeaways?
CEO John Lindeman emphasized their commitment to cost management and increasing the sales mix of higher-margin proprietary brands. He highlighted the encouraging growth in e-commerce and revenue diversification efforts. Looking ahead, Hydrofarm is focused on reinvigorating their brand sales and implementing additional cost-saving measures to enhance long-term shareholder value.
Thank you, John, for your insights. That wraps up our analysis of Hydrofarm's earnings report. Key takeaways. In summary, Hydrofarm faced a challenging fourth quarter with a significant decline in sales and profitability. However, their strategic focus on cost management and proprietary brands provides a pathway for improvement. Key takeaways include net sales of $37.3 million, an adjusted EBITDA of $7.3 million, and an EPS miss of $1. Looking forward, Hydrofarm aims for improved EBITDA in 2025. Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe. We'd love to hear your thoughts on Hydrofarm's performance in the comments below.